Welcome to LeonCo, welcome to your weekly video. Welcome to LeonCo, welcome to your weekly video, and we are culminating our topic for the month of September for the topic of market crashes. Yes, we've gone through a time journey up to the 1900s, up to 2008, and now we are heading to 2020. And this may be the most attractive video for you because this is what's happening today. This is the most relatable circumstances that you're living today. So let's jump right to it. On the late of 2019, there were starting to rumble some intriguing news about this new virus, this new sickness that was brewing up in China. Well, what most of us believed there would be something that would be contained over in China starting to spread all over the world up to early parts of 2020 from January to February, and this sparked up a collapse in the US economy. On February 20, 2020, the US economy started to plummet, and so did the stock market. But why do you ask, or maybe you would ask yourself, why February and not March? Well, in February was the first signs of the market crash, the market collapse that was brewing, and that is when the stock market started to hit. Not necessarily in March. March 20 to March 23 were the peaks of the stock market crash in 2020 when the Dow Jones hit 19,000s from its all-time highs from 28 to 30. So this is something very, very important, very drastic, because this means a collapse of from 8,000 to 10,000 points in the Dow Jones. And this marks the biggest downfall in the last 10 years, descending from the 2008 market crash, from the house market crash. But what were the factors that caused this? Well, this, just like many others, a market crash, was very unique and very particular. From the days of 2019, lots of economists and lots of financial analysts were talking about that we were heading into this market crash, that there was a big bubble that we're heading to, and the economy was going to collapse eventually. Well, on 2020, March 2020, specifically when this whole pandemic started to brew, when the country was shut down, the stock market crashed. And it crashed very particularly because this was the first time in years when the US economy was literally closed. Everything was closed, people were in their homes, and hospitals were flooding with people. Lots of unknowns, lots of questions, and lots of staggering brought to the US economy to crash and plummet. In this market crash particularly, were affected by entertainment, lots of industries that gave services were the most that were affected. But particularly with this market crash, another sector started to plummet up in the sky, and that was the tech sector. The tech sector was in all-time highs when we started to move from this in March and started to build up, because people were stuck in their homes, people needed to work, and the tech companies were providing the tools for them to start working. So if you've noticed in these couple of months, the tech companies and the tech sector is the one that is blooming. You've seen companies having 200% revenue increase, 100% revenue increase. Companies are starting to provide stock splits so they can get more income, get more investors, because their stocks are getting too high. One particularly from this stock market crisis, instead of the others, is that the federal government was willing to do anything and everything for the US economy for it not to collapse even further. Stimulus packages, money giving out to people, loans bringing out to big companies and corporations, forgiveness loans were provided, and so on and so forth throughout these months of journey in this 2020 collapse. But the reality is that there is still some questions or some interrogatives, and these are we at the end of this financial crisis, or is this just the beginning? If you noticed in our first video for this month, when we discussed the crisis on the 1920s, you noticed that there were some social injustice or social circumstances that followed from the stock crash. If you notice, those are the same that are happening today. Yes, 100 years later, we are reliving this cycle of social injustice, social inequality, financial inequality, and lots of other circumstances that 100 years ago seemed unfair, but they are actually unfair to this day as well. So the question is, if it's this 100-year cycle, are we destined for 10 years of financial boredom? Are we destined for a next world war? Or is this just some blimp in the economy and we just need to get our feet back up and run to it? The answer to this question is that we don't know. This is a waiting game. Here in LeonCo, we want to exhort you to stay safe, stay healthy, and always remember to have that king mentality.